And welcome back. There's some remarkable trends happening right now in our US housing market, and I want to talk about it because just 3 weeks ago, the average 30-year fixed rate, according to the Mortgage News Daily, was 7.1%, just 3 weeks ago. Now, at the time of this video, which is actually March 23rd, just 3 weeks later, average rates are about 6.44%. So in today's video, I'm going to talk a little bit more about how that's impacting home buyers. And I'm also going to provide an update regarding home prices, housing inventory, price reductions, and much, much more, according to my own analysis of Realtor.com's data. And before we get started, I invite you guys to subscribe to this channel if you haven't done so already. I post frequent housing market updates so you guys can make a more informed decision about whether you should be buying or selling a home. Also, check out that link below, which is homeandmoney.com/Jason if you guys want a real estate agent referral. With that said, let's go ahead and dive right in. This is my weekly video I make for you guys based on my own analysis of Realtor.com's data. So just like my previous videos, I did not read their latest housing market update. Instead, go to realtor.com/research/data and click on this link right here, which more or less takes you to this Excel spreadsheet right here. So let's go ahead and nerd out. So let's first talk about asking prices in the US. And this is actually for the week ended March 18th this year. An interesting trend right here. Look at this. Asking prices are flat for the past 3 weeks in a row. On top of that, at a gain of 6.3% in asking prices in the US right now compared to the same week 1 year ago. This is actually the smallest increase since June 20th of 2020, just after the onset of COVID. Additionally, asking prices in the US have only increased by single digits for the past 14 weeks in a row. Asking prices have increased by only single digits for the past 14 weeks in a row. And again, this is so much different compared to 2022. Every single week, except for December, we had double-digit increases in asking prices on a year-over-year basis. Now, let's also talk about housing inventory, because last week, that increased by 58.7% compared to the same week of 2022. Here's a new trend, though, because what I was reporting to you guys is an increase of housing inventory in virtually every single week from more or less September through January this year. More or less an upward trajectory of housing inventory on a year-over-year basis. Now that has kind of changed though, because the changes are right here. This is because housing inventory has been more or less on a downward trend on a year-over-year basis going back to early February this year. We did see a small increase for the week ended March 11th, going from 61.1 to 61.4, but a very small increase. But in general, we've seen a decrease of housing supply on a year-over-year basis for the past several weeks now. Now, speaking of housing inventory, Realtor.com is reporting a gain of 59%. But look at this, because AltosResearch.com is reporting gains of 69% on a year-over-year basis. And here's a look at housing inventory according to AltosResearch.com. For the week ended March 17th, there's approximately 414,000 houses for sale. 1 year ago, there's approximately 245,000. So by my dumb math or my nerdy Excel spreadsheet right here, that's a gain of 69%. Now, having said that, look at this though, because housing inventory has been more or less decreasing. Let me get rid of 90 days. Has been more or less decreasing ever since November last year. And on top of that, inventory levels right now, and let me get rid of 90 days again. Inventory levels right now is far higher compared to the past couple of years post-COVID. But when comparing levels pre-COVID, let's just say March 2020, we have a lot fewer houses for sale. So back in March 20th of 2020, there was 737,000 houses for sale. Now there's only 414,000. Back in 2019, nearly 830,000, and also about the same number back in 2018 as well, about 806,000 houses for sale. So even though we have far more houses for sale over the past couple of years, we still have far fewer compared to pre-COVID levels. Again, though, what's remarkable regarding this is that even though we have far fewer houses for sale compared to pre-COVID levels, our housing market has been slowing down big time, right? In the San Francisco Bay Area, prices are down by about 32% compared to last year's highs. Also, for the state as a whole in California, prices down by about 18% from last year's highs as well. All right, let's get back to my analysis of Realtor.com's data here. I also want to talk about new listings because this is quite remarkable as well. We're seeing a decrease of new listings on a year-over-year basis for quite some time, despite the fact that inventory has grown by 59%. So new listings have been decreasing compared to last year for the past 37 weeks in a row. Additionally, for the past 8 weeks in a row, we've been seeing double-digit decreases of new listings. Additionally, we've been seeing double-digit decreases of new listings for 32 out of the last 34 weeks. Now, the remarkable part about this is that even though we're seeing this giant decrease of new listings, housing supply has grown by 58.7%. Here's something you guys should be aware of as well, because when looking at this chart right here, it appears that new listings are decreasing every single week. Now, keep in mind though, this is based on year-over-year changes though, because when looking at weekly changes of new listings have actually been increasing, just not at the same levels over the past several years. So here's the latest we have from Redfin regarding new listings. So right now, new listings for the 4 weeks ended March 19th are down by 21.9%. So what's interesting about this is that the gap between this year compared to years past is actually widening. For the 4 weeks ended January 15th, we were down 18.9%. Then 1 week later, down by 18.3%. For the 4 weeks ended February 5th, we were down 16.7% compared to the same time frame in 2022. Look what happened after that though. We peeled away from 2022 here. The next week, it was a decrease of 17.9%, then down by 20.1%, then down by 21.8%, now it's down by 21.9%. Therefore, as you can see, new listings have been increasing every single week, but not at the same pace compared to 2022, and of course compared to the past several years as well. So for example, this year there's approximately 75,000 new listings over the past 4 weeks. Compare this to 2022 though, there was approximately 95,569. And that, of course, is a decrease of approximately 22%. I also want to share how fast or how slow houses are selling in the US right now. Because according to data from Realtor.com, it's taking approximately 18 days longer to sell a house right now compared to 2022. Taking nearly 3 weeks longer to sell a home compared to the same week of 2022. Additionally, it's taking longer for houses to sell in the US compared to last year for 33 consecutive weeks now. Now, having said that, again, a friendly reminder, when talking about days in the market, this is a lagging indication of our housing market because this is based on a closed home sale. Now, having said that, let's have a look at the number of reduced price listings in the US because this is also a new trend emerging as well. Because the number of reduced price listings on a year-over-year basis has decreased for 6 consecutive weeks. It has been decreasing every week ever since February 11th this year. Now, having said that, we're still up greatly from a year ago though, because the number of reduced price listings has grown by 112%. Additionally, as a note right here, we've been seeing triple-digit gains in the number of reduced price listings in 18 out of the last 20 weeks. So that was the number of reduced price listings, but also want to discuss the share of price drops as well, according to altosresearch.com. This is, by the way, is for the week ended March 17th this year. The share price drops right now is approximately at 30%, which means 3 of every 10 houses for sale in the US have reduced their asking prices. This is much lower compared to mid-November though, when the share was 43%. This means over the span of the last 4 months, the share of price reductions has decreased by 13 percentage points. And the best way to share this with you guys is to have a look at this. The share of price drops right now at 30%, much lower than the highs we had back in mid-November at approximately 43%. Also at 30% right now, this is actually the lowest levels going back to approximately July 1st last year. Now, having said that, During the same time period right now, which is mid-March, compare this to last year, 17% was a share of price drops. 2 years ago, it was 16% as well. So the share of price drops is much higher right now compared to 2022 as well as 2021. However, though, it's also higher compared to pre-COVID levels. So for example, back in March of 2019, the share of price drops was 28%, more or less on par with what we're seeing right now at 30%. But compare this to 2018, let's just say the end of March of 2018, the share price drops was 25.5%. Therefore, the current levels right now at 30% during the same time frame is at least a 5-year high. All right, I know that was a lot to cover in today's video, so here's a summary for you guys as well. Number one, asking prices in the US only increased by 6.3% on a year-over-year basis and have been pegged at that level for 3 weeks in a row. This is actually the smallest increase since June 20th of 2020. And number two, housing inventory rose by 59% last week. However, it's been on a downward trend since November last year. We're currently at the lowest levels since June of last year regarding housing inventory. Also, new listings have been decreasing by double digits for 32 at last 34 weeks. This continued lack of new inventory or new supply of houses for sale is one of the main reasons why we have historically low levels of housing inventory. And number three, average 30-year fixed rate mortgage rates are at the lowest levels since early February this year, at 6.44% at the time of this video, which is on March 23rd. Compare that to the highs we saw back in the early part of March. Average rates were around 7.1%. Now, having said that, even though rates are around 6.44% at the time of filming this video, and that's more or less a 1 month low, this is still much higher compared to the past few years. So for example, 1 year ago, rates were averaging at 4.7%. And number four, we saw a huge increase in the number of reduced price listings over the past 5 months. We also saw triple-digit year-over-year increases in 18 out of the last 20 weeks. However, the share of price drops has been on a downward trend since mid-November last year. This could be from inventory decreasing over the past 4 months. And number five, houses are taking longer to sell compared to the same week 1 year ago for 33 consecutive weeks. Again, though, this is a lagging indicator. So what are some potential huge changes ahead given the fact that rates are at 1 month lows? However, it's much higher compared to the past several years. Number one, average rates are around 2 percentage points higher right now compared to 12 months ago. This causes a 20% decrease in buyers' purchasing power. And number three, housing affordability is still an issue in the US. However, more recently, it actually has been improving. So for example, buyers looking to purchase a $450,000 home, putting 5% down today, compared to the beginning of March this year, are going to save around $188 per month for their housing payment based on principal and interest. And this is because rates have decreased from about 7.1% to around 6.4%. Something else worth noting here as well, as I mentioned right here, is that this is a decrease in your average monthly housing payment, again, down $188 per month. Compare this to about 1 month ago. I was reporting to you guys how average monthly housing payments were actually an increase by $200 per month. Therefore, housing affordability, due to the fact that rates have been coming down, is actually getting worse, but we still have a long ways to go. Let's just be honest. And that, of course, is because rates and, of course, prices have actually been skyrocketing over the past several years. Number three, after the bank closures, investors have been flocking to the safety of treasury bonds, causing yields on those bonds to fall and for mortgage rates to fall as well. Rates also fell after Fed Chair Jerome Powell's speech on Wednesday because he had a less hawkish tone regarding future rate hikes by the Fed. And therefore, average mortgage rates actually decreased from about 7% that we saw in the beginning of March. Now they're hovering around 6.4%. And speaking of the Fed, here's number four. To combat inflation, the Fed has been raising rates. We're seeing inflation start to wind down just a little bit, but it's remaining very, very sticky. How much the Fed decides to raise rates depends on incoming inflation data, so of course a lot could change. And number 5, we're starting to see some very early signs that home buying demand is increasing. So for example, according to the Mortgage Bankers Association, or the MBA, applications for home loans to buy houses have now increased for 3 consecutive weeks. However, having said that, we're still down by about 36% compared to 1 year ago, and historically speaking, we're still at very low levels. Also, new home sales, in other words, contracts being signed between buyers and home builders, that actually increased slightly for the past 3 months in a row. December through February, a slight increase in new home sales in the US, according to the US Census Bureau. However, new pending home sales for existing houses have been decreasing by double digits every single week this year, according to data from Redfin. And number 6, I appreciate you guys watching this video, and of course, I appreciate you guys for supporting my YouTube channel. Please subscribe and also hit the like button if you haven't done so already. Hope you guys have an awesome day. I look forward to seeing you on the next video.